on board Matt Orton as well and figure out how the world is going to maneuver all the news flow out of the Middle East. Matt, hi, good morning. Great to have you on the show. Matt, not seeing much of a damage. One would have expected that today is going to be that big fall day. It's not such a big fall. It seems like the markets were already sort of, baking in rising Middle East tension.
Hey, good morning, Aisha. It's always great to join. And I think that's exactly it. So we're certainly seeing a negative reaction to the news. And this is certainly more of a benign scenario than I would have anticipated on Saturday morning when I woke up to the news. But when I contextualize what's been happening, say over the past 2 weeks or so, as there's negotiations have been playing out between Iran and the U.S., I think the market has been expecting some sort of hostilities to actually occur, and particularly the way negotiations ended at the end of last week. I think the expectation was that we were going to see conflict. It was not an if, it was a when. And the action in crude prices, the action in the equity markets, all of that, I think, filtered through to say investors have been prepared for this. So it's encouraging to see even some of the gains in energy prices. So crude in particular have come off the worst jumps of the day, and they've been moving lower. It's encouraging to see some of the Asian futures increasing, not continuing to fall lower. So all of that, I think, says there's going to be some fallout from this, but investors were prepared, and I think they're waiting for the dust to settle to see how long and protracted this conflict actually is. And then the key question is what happens to the Strait of Hormuz, and that ultimately, I think, will guide where energy prices will go over the next couple of weeks.
Matt, if you look at how some of the commodities are reacting, gold for that matter, gold, silver, and crude, it seems that they have factored in this entire escalation, and it's nothing unusual for them for that market as we speak. Do you see the market being a little mature in the way they've taken this entire escalation?
I do. And I think, again, Savita, it comes back to the fact that markets have largely been prepared because this has been so well telegraphed. So if you look back to what happened last June, I think markets were caught a little bit more by surprise by the actions that happened between the U.S. and Israel and Iran. And again, that was very, very targeted, very limited. The retaliation from Iran was very limited, and then the markets were able to rally after this. I think it's a little bit too early to say that markets are just going to bounce back from maybe a 1 or 2 day pullback from what we're seeing. Again, because this could be a multi-day, a multi-week campaign. We just don't know when and what the ultimate end game actually is. So I think investors are waiting to get a little bit more clarity, and then they'll base their positioning on that. But positioning has been light. Investor sentiment has already been weak heading into this. Hedges were already added to the market in advance of this. So I don't think there's that rush for protection like we've had in the past because of all of the churn that's already been happening across global markets, really for the better part of this year. And you've seen that same thing play out in the commodity space. Gold has already been very, very well bid. Crude oil is impounding probably a $10 premium per barrel already heading into this. So there's not that much more room for it to increase unless, of course, there's going to be more disruptions through the main travel channel. But again, the offset to that is that the U.S. Navy has a big presence there. And so the duration of that is probably going to be fairly limited.
Matt, as questions only get louder about the R, that's the return when it comes to all the AI capex. Tell me, how is it that you're reading into the news of the US clampdown now on Anthropic?
It's very interesting. I think that there's politics that are involved in what's happening with respect to Anthropic, but Anthropic has been the epicenter of a lot of these new tools that have really been just causing all of these drive-by shootings to different parts of the overall market. Their Claude code is a very, very powerful tool. But the challenge I see, Aisha, with respect to the AI narrative in the market is that there's these two competing narratives that simply cannot coexist. Because on one hand, you have criticisms to the hyperscalers in that all of this money being spent can't have an ROI or isn't going to have an ROI for a very, very long period of time. But on the other hand, investors are worried that AI is taking over everything, going to lead to massive job losses, and it's going to be rapidly implemented. So if it's rapidly implemented, there is going to be an ROI on that CapEx. So I think the market has some existential thinking it has to do about where this trade goes. I do think it ultimately resolves itself, but I am certainly not a buyer of dips in software, though I do think there's a lot of high quality investments that have been thrown out with the bathwater. It's just not time yet to wade into that. And instead, I look at companies who are benefiting from integrating AI into their business, and I'm looking at companies who are beneficiaries of all of that CapEx money that's being spent. And I think that's the playbook, at least for the near term, with respect to this AI shakedown happening in the market.
Okay, appreciate that view. Matt, hi. Your note says it has a very interesting line in it, which says a healthy market should rally on good earnings, absorb bad news, and keep oversold conditions brief. Talking about the Indian market particularly, the Indian market has done anything but that. Given the distance that India has from the escalation that's happening in the West, do you now believe India could be an attractive market for FIIs to relook, given that we had seen a little bit of buying and that also reversed course quite quickly? Where do you believe India is positioned, given everything that's happening geopolitically?
Yeah, I'm glad you called that out, actually, because that's a key narrative I've been talking to clients about. It is just my general concern with where the market is and kind of the sideways to slightly negative bias a lot of key markets have been having outside of some AI-related emerging markets in Europe, broadly speaking. I think the benefit to foreign investors, and I've been traveling, meeting with clients for the past 2 weeks, and there's actually a lot of receptivity to this, is as you look to diversify your portfolio of global investments, India looks particularly attractive just because of the correlation it has to the rest of the US market. It has almost a zero correlation on a rolling 6-month basis to the S&P 500. That's very powerful, especially when you have these pangs of risk-off scenarios, or say you end up in a situation like 2022, which is not at all my base case, but India did quite well in 2022, and it did fairly well in 2023. So I think investors have to look at that side of the equation and be willing to put a little bit of money to work and then edge up that position as we do see the market hopefully react more positively to what I think has been a very good earnings season in India and take some of this bad news in stride. And I think we'll see how everything shakes out this week. But if Indian markets can hold some key technical levels, perhaps we'll start to get that second area. And in India, at least, outside of IT services, we haven't seen oversold conditions persist for too long of periods of time. But again, that is a critical part of the market. So we do need to see a turnaround overall. But again, being selective right now is the name of the game. And there's still a lot of high quality investments, both in India and around the rest of the world, that can and should do well, irrespective of the geopolitical situation.
Right. Okay, Matt, always good chatting with you. Thanks as always for your time today.
Thank you.
Well, the war in the Middle East, that's definitely